Uh, Time to talk winners and losers with our financial expert, Rob Black, standing by to talk about the markets this morning. Rob, things looking pretty good.
Yeah, it's humbling because there's a war going on.
Yeah.
There's high oil. We had 3 great years in a row. Now we're starting to look like a 4th one. Markets are at all-time high. The S&P 500, the Nasdaq, the Russell, the Dow is really close. There may be a deal close for Iran in the United States. I'll believe it when I see it at this point in time. But Trump says if they don't, the bombing starts again, and then we'll be stressed and again. But I like what I'm seeing, all things considered. The markets are showing resilience with great earnings and great profit margins.
Yeah, I feel like we're kind of in a constant state of stress, and every once in a while it has to spike up. Just like our gas prices, they've just like continued to spike. We had a story yesterday, Will was on, where the gas was literally $7.80 for a gallon of regular gas at a couple of stations here in the Bay Area. So that's not really helping anybody's wallet.
Yeah, I saw $7.75 up in Truckee, California this weekend, and I was like, nope, I'll just keep on driving. My local one is $6.50 in Fairfax, close to San Anselmo. So gas is at $5. It's creeping towards $5. That's the correct way of saying it. Nationally, it's $4.52. So it's on the other side of 50, moving closer to that 5. But maybe we are at a peak zone. It's up 30 cents, though, in the last week. It's up 50 cents since the start of the war. And, of course, like you mentioned, California's $6.14, I think, on average. But we're seeing much higher prices out in the wild.
Yeah, we're losing a lot of money at the pump. But also losing, you have Americans are really in some serious auto debt.
Yeah, this isn't good to see because I'm going to give you a crazy number. It's $1.6 trillion. That's up 37% since 2018, which is more than our salaries are up. But I went all the way back to when I started at Cron in 2001, and it was $600 billion. So we've gone from $600 billion to $1.6 billion. It's a lot of debt, $1.6 trillion. Let me get that correct. Yeah. 86 million Americans, 1 in 4, carry auto loan debt right now. The average origination of debt is about $33,519 for each new car that we're acquiring. 7 years ago, the average origination fee was $24,780. So $24,000 all the way up to $33,000 in 7 years. You could see, again, not keeping up with our far outpacing our paychecks. So it's a problem. And I don't think it gets better because cars are getting more expensive.
Yeah.
So the average not the first time, but the average new car buyer makes $150,000 or more, 43% of the time. So a lot of used cars for the middle income and lower income out there.
Yeah, definitely. I mean, I have got a year and a half left on my car payment, so I'm like steadily trying to make my way through it. A lot of people.
You're gonna laugh at me. I've always tried to buy used cars until my last car.
Oh.
That was the first one I bought new.
I mean, it's a preference, right? But then also, for me, like, I want to keep my car for a really long time, if that makes sense, So it's like, okay, if I buy a new car, then let's keep it for as long as possible. So that's sort of always been my plan. We were going to talk fully electric vehicle Ferrari real quick. Anything to say?
Yeah, it comes out on May 25th. If you have $600,000, you want to get me a luxury 4-door car. It's probably going to be an SUV. We don't know. It's going to go to 0 to 25 in 0 to 60 in 2.5 seconds, which is quite impressive. 1,000 horsepower, only $600,000 plus dollars,
My goodness.
Including tariffs.
Well, if you got it, flaunt it, I guess. Rob, thank you. Always appreciate your time.